Welcome back to another episode of With Sonar. I'm your host, Luke Falasca, of course, joined here by Tony Mulvey. We've got a great lineup today. It's the first week and show of October as we head into the fourth quarter. Tony, it's going to be an interesting fourth quarter.
Yeah, I mean, obviously you have peak season, right? I mean, we are headed for it if there is a peak.
If there is a peak. Peak's is relative, though.
Yeah,
right?
True. I mean, there will still be movements made in the fourth quarter, and
always.
a lot of them. But it's how do they look in comparison to previous years?
That's what I'm saying. I mean, if you think about it, right, the Smoky Mountains have a peak. It might be a little bit lower than Mount Everest, but it's still a peak.
Yeah, same. Smokies are shorter than, or less peaky than the Rockies.
They are.
Yeah.
It's all important things. My backyard, not very peaky, and not relevant to this conversation. Anyways, we've got a lot to discuss here. So we're going to look at demand. A lot of things are happening from a demand side. Okay, we've been looking at that, but there's some acceleration in the movement in demand lately, both on the domestic truckload side, and then we're going to transition and look more on the ocean side. But we're also going to look very heavily at ocean rates. There's been a lot of conversations as to how far do things fall. We know the market's been sliding. How far does it fall? Did we go all the way back to 2019 levels, 2018 levels? Where are we going back to? Do we go back to 1864? Hopefully not. But things are shifting, and we're really starting to, I think, see things unfold a little bit and quantify how great the impact of these demand shifts are happening. Before we get to all that, though, Tony, in just under a month, we have our next event, F3, Future of Freight Festival, here in Chattanooga.
Yeah, I mean, it is going to be awesome, right? I mean, 3 days of, keynotes, fireside chats.
With Sonar.
With Sonar.
Yeah.
I've heard maybe 3 days of with Sonar.
3 days with Sonar.
Then
we'll have customers of Sonar talking. Yeah. That'll be great too. A lot of it'll just be like us asking questions and then just kind of like letting them talk.
Yeah, absolutely. And then, I mean, obviously experiences, right? That networking aspect of it. I mean, that's going to be a big theme at this. I mean, if you look at that tentative agenda, I mean, you got stuff from 7 a.m. starting with breakfast all the way up to like 11 p.m. Tuesday and Wednesday night.
So I go to a lot of conferences, right? Pretty much whenever we don't have this show, it's because I'm somewhere traveling, for work. Usually it's work, not always, but most of the time. Anyways, so we've got, and one of my biggest pet peeves with conferences that we go to is that there's, you have the sessions and everything, and that's great, but sometimes they go until 5 or 6 p.m. at night. And it really drags out the day. Like after lunch, you get a little bit of a boost for lunchtime. You're ready to go. But then it's like, all right, we've got like 5 more hours after lunch. Maybe 2 more is all we can do. So that's what I'm really looking forward to about this event is basically it goes from the actual content is from 8 to 3. That's a quick day. That's a school day. That's it. We're in, we're out. And then the experiences come. That's what you've been talking about.
Yep.
What kind of experiences are you looking for?
Oh,
you got any on the top of your head?
We saw the promo. I mean, you saw axe throwing.
Axe throwing is going to be good. I'm going to throw down on axe throwing, just to be clear.
Chattanooga whiskey distilling tours,
whiskey
things like that. I mean,
going to be nice.
There's going to be a lot of cool stuff going on. And it's not just in the convention center, right?
No.
I mean, if you think about a lot of these conferences that you've been to, I've been to a few, they're all centered around a convention center. This is centered around the entire city of Chattanooga. Yes. I mean, there's going to be stuff to do all across town for F3, and I think that's the part that's going to be awesome.
Yeah, and here's the best part of it all. We will be busing or van people around between all those events, so you don't have to worry about getting yourself there. I think that's great. It's an unfamiliar city for a lot of people. They don't have to worry about getting themselves, calling an Uber, nothing. We're going to take care of that. So anyways, our little self-promotional plug's over, but it's going to be a great time. You guys should absolutely come. Plus, you get to meet Tony and I, which is probably going to be the highlight of your entire life. But back to the demand side of things, Tony. We've seen the truckload market move a lot. And something that Craig always says, Craig Fuller, our CEO, for those unaware, is Sonar, really the trucking market specifically in the United States really tracks the physical goods economy, right? I mean, if you have something in your house or if there's a building or whatever, chances are it was on a truck at some point. So what I want to do here, let's go ahead and throw up this chart. It's a chart that a lot of us are familiar with if you watch the show consistently. So it's our truckload volume chart. And all I want you to look at right now is the blue line. There's a blue and green line there. Just look at the blue line for a minute. So we've seen, this is over the last year, and this is updated as of this morning. So we've seen truckload volume kind of slowly step down there kind of in the fourth quarter last year, but we saw a big acceleration of the step down in March, April, May. But what's interesting is it kind of looks like we're getting into like maybe the third phase of this step down there, Tony.
Yeah, I mean, really, you look at this, right? Look at that peak right at June, right? Right when we come back from Memorial Day, and look at what we've done since then, right? It's been down. I mean, that trend is down. I think what's worth noting,
tiny little blip there going up to Labor Day. Tiny being the underlying word.
But I mean, look at where we're at now compared to then. We're well below that, and I think that's the part that concerns me a lot. And the real big concern is, so if you look at this, if you were to take the percentage, we've seen a 4.6% drop. From as of yesterday's, from September 26th. Think of that. I mean, that's right.
Effectively.
Yeah, it's a week, over 10 days, somewhere in that range. I mean, you're seeing, if you think that last week of September, end of the month, end of the quarter, right? Shippers should be moving things off their docks.
Yeah.
And demand's just not there. I think that's the tender levels slid in a period where there should be a little support, and it seems like there wasn't. I mean, you did see a little blip. And I mean, some of this, going a little off track, I mean, you think about, obviously we had Hurricane Ian hit last week. A lot of that stuff disaster relief doesn't get tendered, right? I mean, it's FEMA moves it through their own process. It's not like a normal shipper moving freight, right? So it's more of you might not see it show up in the volumes, but you may see the impact show up in rejection rates, right? Because it'll suck capacity in to cover those loads, and it's not there for your tender volumes. Well, guess what? I mean, you haven't seen tender volumes, or they've continued to decline. Rejection rates didn't really react. I mean, they did in the Southeast. There's been upticks in the Southeast in rejections.
Makes sense for the hurricane, but
on a national level, I mean, it's basically nothing.
No impact.
Yeah. So, I mean, I think that's something to note. I mean, you would have thought you might have seen some reaction, and really there just wasn't.
Yeah. No, that's an excellent point here. And I think that's when we look at this, it's, the acceleration of the downward pressure. And then, like you said, kind of the no movement there and the tender rejection. So it'll be interesting to see. And this is something where, when we look at fourth quarter, obviously some folks benefit from this, some folks don't, right? Yep. I mean, you've got a lot of shippers. Well, shippers are in an interesting place, right? Shippers benefit from this in the sense that they can drive their costs down to transport goods. But on the flip side, if they're moving less inventory from a business perspective, it can hurt them there, especially the retailers.
Yeah, I mean, you don't want to show excess inventory necessarily on your balance sheet, right? You want to show that that you're reacting kind of the way you should be, or handling that inventory, right? Your demand planning strong, things like that. Obviously, the pandemic's made demand planning very difficult, but I mean, you're dealing with a consumer that's changing. And I think that we talk about it all the time, but I don't know if it gets a lot of attention elsewhere. I mean, you're starting to see other mainstream media start talking about changing consumer behaviors. We've been talking about it for months, because you just start looking at these trends, right? I mean, you look back really when we saw demand fall off in March, April, May, we talked about these changing consumer conditions. Then you see the inflation pressures, and ultimately the consumer's hurting, and everybody kind of understands that, but people just don't seem to want to talk about it because it is bad news, right? And it's, people don't, it kind of can instill panic or fear to just the everyday consumer. But I mean, understanding how those behaviors are changing, it can kind of lead you into, okay, seeing a drop in truckload demand makes sense.
Yes. Yeah, and I was having a conversation with a pretty large carrier the other day, and they were talking about how, like, this is only going to be good for for shippers. They're going to benefit greatly from this. And on one side of the aisle, they are, right, in that they're going to drive their costs down. But, right, like, it's not like costs are coming down as the result of excess capacity.
Yep.
Costs are coming down as a result of declining demand. Who has the demand? Shippers. So they just have less to move, which means their sales are going to take a hit. Right? As a result, yes, they do get to save money on the freight that they are moving, but it's much less than they were previously moving and would probably like to move.
Yeah.
So, and but rightly so, carriers as well there will be a little bit of pain for some carriers for a while. And some are already feeling that. Some have positioned themselves a little bit better than others to maybe kind of hedge a little bit against this. But it'll definitely be an interesting fourth quarter for both shippers and the logistics providers.
Yeah, I mean, I think the mailbag question this week was talking on FreightWaves Now was talking about who positioned themselves throughout the pandemic to come out in a better place, right?
Yeah.
I mean, because if you think about what the pandemic really did, it created this, if you think about trucking cycles and how transportation kind of is that cyclical, I mean, perfect example of a cyclical commodity. I mean, Craig talks about it all the time, trucking is a commodity, right? You're buying or selling. That commodity is the truck and the driver moving the freight.
Yeah.
I mean, so it's this cyclical change, and we've been at this, 24-month peak?
Yeah.
It's got to come down, and it's coming down, and we're seeing it, and it's how far down does it go, and how long does it stay low, right? I mean, if you think 2019 was bad, it came off of, a relatively strong 2018, back half of 17, so I mean, we're talking, 6 quarters?
Right.
And then we were 4 quarters, well, really 5, if you think first quarter of 2021 or 2020, and even the second quarter were relatively soft. I mean, periods. Granted, the pandemic aided some of that softness, but what you're seeing is this. I mean, just an increase. I mean, now we're headed off of a 8-quarter upswing. What does it mean on the downside?
Yeah.
I know a word that we see a lot is normalization.
I hate that word right now. It's a stupid word.
Yeah, because what's normal? I mean, that's the ultimately what's the thing.
That's a great transition. Let's go to our next chart here, okay? Normalization. Let's talk about that, okay? So we've got this chart right here. This is over the last year. These are inbound ocean TEU volumes coming to the United States. Now, to be clear, this isn't customs data. Customs data is going to look a little different from this. This is the bookings, right? So these are daily booking volumes of TEUs that are, as of this morning, going to be shipped from foreign ports headed to the United States. So good rule of thumb is typically, what you see here tends to show up at ports and clear customs sometimes in 60 to 90 days out. Depending on, the port congestion, that can be greater or less, but that's a good rule of thumb. So we've seen this big decline here, and actually, I don't want to spend a lot of time on this chart, so that's it. Volumes are down, and they're down approximately 35%. Quick mental math here, okay? Let's jump right to the next chart here real quick, okay? I want to skip this one, and this is the important one here. So this is ocean volumes specifically from China to the United States. So before we were looking at everything coming to the United States, which is down about 35% from its peak or this time last year, now we've got China to the U.S. specifically. So yellow arrow is there today, okay? And then the pink arrow is October of 2019. It's probably a little hard to see on the screen, but today we are slightly above where we were in October of 2019. And the white line all the way on the right, probably hard to see on the screen, is the future bookings. So those are bookings that have already been placed for the future, and they are down almost to 2019 levels. So of October. So that's really what's being said here. So yes, we are normalizing from a demand perspective, but we don't live in the same world that we did in 2019.
No, I mean,
Tony.
I think that's the biggest thing. It's like normalization, everything else has changed, right?
Yes.
I mean, everything's more expensive. I mean, look at the inflation numbers. All of that is...
Those English cucumbers that I buy in the grocery store, those are 50 cents more a cucumber than they were 2 years ago. I know. I see what you're doing there, grocery stores.
But, I mean, this chart's great. And I think it's important to note, you look at that bump, right? Look at where we were, say, 2 weeks ago. And then you see a bump last week.
Yeah.
That bump right now is Golden Week in China, which is a national holiday very similar to Chinese New Year, where manufacturing things slow down. So it was a pull forward to get things off of the docks and start moving them to the U.S. prior to Golden Week. And you do see that slowdown immediately after when it shut down. But look at where we were prior to any uptick there. That level was basically the equivalent of 2019. And I think that's the part to note is, Henry wrote his article I think it was June 7th.
Yes.
Talking about that big decline we saw in this index back in the back half of May, saying, I see it coming.
Yeah.
Now, what some of it didn't was these backlogs, right, that we saw at the ports were so large that it took a while to see any indication. You start looking at some of the, look at import levels into LA Long Beach. Everybody's going to point that, hey, things shifted to the East Coast. Yes, that is true. That did happen. But LA Long Beach is still the largest port complex in the country by a lot. And they saw volumes decline 17% year over year. That is a massive decline in August. And you start looking at September's data, and it doesn't look much better. No. And I think it's like, yes, there was some shift, but you can't take all of LA and Long Beach and shift it to the East Coast. It's just not possible.
LA and Long Beach is double the size of New York, New Jersey. And that is after New York, New Jersey has already grown by double-digit percentage points to get to half of its size. And even though that shift is happening there, Tony, we're beginning to see it kind of dwindle a little bit. It's losing steam. It's coming down as well, the East Coast ports. And so you're 100% right. So the moral of the story is, from a demand perspective, we are hitting those 2019 levels. Different ports and trade lanes are kind of hitting them at different paces, but we are effectively there, or within a stone's throw from it.
Yeah.
And to go on, the question really, and this is where I want to focus, is there's been a lot of questions on rates and everything. We haven't done a lot of focus on the show about ocean rates. Let's go ahead and pull up the ocean spot rates and container rates from China to the West Coast. Okay, and this is really going to be the fate of a lot of those Eastern, East Coast trade lanes, right? As we've just seen, overall imports are down nearly at 2019 levels. It's not just China to the West Coast or China to Long Beach, right? It's not just that trade lane. It's everywhere. But since it did happen to the West Coast first, this is a great signal that we can look at for what to expect in some of those other trade lanes. And if you look at this here, right, this is over the last 5 years. Yellow line is today's rate, sitting at just a hair over $2,500 for a 40-foot container from China to the West Coast. Pink arrow there is not 2019, that's October of 2018. It's the same number of October of 2018.
Yeah.
The same number.
And I think it's really important to note, look at that big jump we saw right in July of last year.
Yes.
And there was a change in the methodology because the rates at the time weren't indicative of some of the surcharges and things going on. So this index itself, the methodology has changed to basically show the market better than what it was prior. So, guess what? To me, you have to think, looking at this in comparison, you talk about 2018. October 2018, 2019, the beginning of 2019, tariffs were set to come into place, right, against Chinese goods. There was this pull forward of freight in the back half of 2018. Rates increased, right? We're at that level now, and there's no pull forward of demand. Demand is just, it feels like it's collapsing. We're talking about a 16% decline in this rate week over week. 16%.
It's massive.
Yeah, and that's what it's like. It's not a capacity thing. How hard is it to build one of these 20,000 TEU vessels?
My son's got like 12 of them in his bathtub right now, so easy, Tony. Got them everywhere.
It's not like adding truckload capacity to the market, right?
It's slow process.
That, and there's we'll say 15 ocean carriers, right?
10 ocean carriers have 90% of the capacity.
Yeah.
Right?
They can control the capacity, right? They can pull capacity off of certain lanes as demand falls.
Right.
They're trying to do that. They're increasing the number of blank sailings. That's what they were doing in 2019 because rates were so low. They wanted to try to prop them up because there was no demand. They're doing the same thing now. And the issue is it's just really starting. And that's the part that concerns me is like, we've seen this massive decline, but it's like, it doesn't really seem to be a floor yet. It hasn't flattened out. Again, we're talking a 16% decline week over week.
Week over week.
Yeah.
Right. Nearly 50% decline in booking volumes.
Yeah.
Nearly. And that's quite impactful. Yeah, and this isn't, I know like for a lot of folks that are watching, especially if you're watching this for the first time, it probably sounds like Tony and I are a lot of doom and gloom. That's not what this is. This is simply the reality of where we are. There is going to be a normalization of some kind, but we can't really compare it to the past because this hasn't happened before. We're in uncharted waters, pun absolutely intended. So really kind of there will kind of be I think we will stabilize a little bit. The question is, where is that stabilization? And then I think after the dust settles, then we'll kind of shift around a lot. But then again, right? There's a lot of other uncertainties that could shake things up, right? Political uncertainties, potential wars that could continue to escalate, that could shoot things back up. That's the thing. This could all change tomorrow.
Yeah, I mean that's right. I mean, look what COVID did, right? 2020 was set up to not be a great year for freight, and COVID happened, and it set up the best 2-year bull run, of all time.
Pot of gold at the end of the rainbow.
Yeah, so I mean, there's definitely catalysts out there that can change this very quickly, and it isn't to say it's like you said, it's not doom and gloom. It's just, all right, we talk about 2019 a lot in comparison to what we're talking about now. Ignoring 2020 and 2021, almost like they never happened, which is crazy to me because they did, and that is reality. But you think about what 2019 was. Especially shifting kind of back domestically, you saw a record number of bankruptcies. So, I mean, these are trends. If we're headed that direction, which it sure seems like we are, it is set up for not a great outlook in 2023.
2023 could be a tough figure. And I think what's important to take away here, whether you're a shipper, a carrier, a freight forwarder, a 3PL, wherever your role is, or even, maybe you're on the financial side of the markets, the important thing here is you still have some time to pivot. Yeah. You still have some time to make some really strategic moves here. I think some of the carriers that we talked about this briefly, some carriers that position themselves very well. I know there's a handful of them, JB Hunt, Knight-Swift, a couple of others did very, very well. They didn't buy too many assets. Right? And in fact, they actually removed some of their used assets when truck prices were as high as they were so that they could take that money and kind of set it aside for the future, right? So they have a little bit of cash to weather the storm, right? So, things like this, this is just the reality of the market. We're all going through downturns, right? The stock market's doing down right now, right? It's the same thing, right? You wouldn't put money in the stock market and hope that it goes up if you need that money to maybe pay your bills next month. Yeah. You put money in the stock market that you're like, my time horizon is 5, 10, 15, 20, 30 years, right? Because you know that you can withstand those times. This is the same thing.
Yeah, and I mean, I think you make a great point. I mean, you saw the big enterprise carriers really, what differs between, say, 2018 and 2021 and 2022, carriers didn't grow, they grew their fleets by a lot. I mean, they were constantly buying new equipment, and they're still buying new equipment, but they're not growing their fleet size the way they did back in 2018. And that's the big difference, that these big carriers, they didn't go and just grow. They were very strategic. They were like, this isn't sustainable. It will come back down, and we don't want to be set here oversupplied with too much equipment that we can't really seat, which was another issue that they had, that probably part of the reason they didn't grow. But these smaller guys that went and entered the market on their own, I mean,
paid sky-high prices for the truck, insurance was sky-high, fuel.
All of their costs are exponentially higher than what they were. And I think that's the key to remember, is these guys were all buying in at a high price, and that price is now bottomed. It's like if you bought Bitcoin at 60,000, and now it's thinking spot rates are going to stay at 350, and now they've come down to $2.75. It's a big drop. And what you were thinking when you did that. So, I mean, that's where it is important to stay on top of this and use the data to make, I don't say necessarily make your strategic decisions, but give you a why. I think if you can pinpoint to a why, it makes that decision making a little easier.
We're skipping over something very important here, and that for folks watching, Tony just said to go all in on Bitcoin.
That is not
financial advice, but also no, I'll tease it. But anyways, I won't get us in trouble. We're gonna get in trouble if we go down the route. But anyways, no, you're absolutely right. This has been a good episode. You know what would be for any folks who've joined late and you aren't aware, though, we're getting close towards the end of the time here. Tony and I were talking about at the beginning of the show, and we're gonna talk a lot more about this. In fact, you're actually gonna be able to hear some of our customers' perspective. We're gonna have some customers who are shippers, carriers, and 3PLs all actually talk about some of this at our next event, F3, coming up in November. So going to be a great time there, F3. You can sign up. I think they're actually still doing a discount on the tickets right now.
Yeah, you got to act now. I think prices go up October 15th.
Okay.
So, I mean, if you want it for a discounted price, right now is the time to buy those tickets.
And if you want a super discounted price, you could email me, in which case I'll make a lot of promises I can't keep. But it never hurts to ask.
That's the sales guy.
Yes. Never hurts to ask, and I'll see if I can shake any trees. But don't get your hopes up. But anyways, no, it's gonna be a great event. F3, November 1st through the 3rd. Gonna be a great time.
Yeah.
Especially the experiences. Gonna be a good time to talk to people and even just kind of get to know people outside of the professional world. So I'm excited about that too.
Absolutely.
Anyways, folks, it's been a great episode. Thanks so much for tuning in. Leave us a comment or a like on social media. Otherwise, tune in next week live, 3:30 Eastern time. Have a fantastic rest of your day.